Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, January 29th, 2026. What I'm going to do in this video, I did promise you part two for the long trade ideas. I had one reply yesterday, thanking me for going through the active trade ideas and asking more of it. Absolutely. If I did just one subscriber that likes something or wants something, if it's feasible. Sometimes I can't always accommodate everything, but I will do my best. And so yeah, I'll most certainly make a point to do more of this. So remember, there's two type of trade ideas shared on right side of the chart: trade setups and actionable trades. A setup, and that's if you go into the trade ideas on the site on the top category, it'll show what the difference is. A setup is a bullish or a bearish potential trade pending a buy or sell signal breakout. Typically of a bullish chart pattern above support resistance. Maybe we're looking for some type of bullish or bearish candlestick reversal pattern. And then, but within the active trades, as you guys know, and this is one reason, I can't publish performance stats because they're not to mention but the primary reason is there's multiple entry points on a lot of the trades, and that's what I'll do. I'll highlight a trade that we might be, looking at 3-4 price targets, a trade that's expected to pan out for a multi-month move, and therefore, as you guys know me, I'm very active trader, very precise with my analysis and entry points, and will often buy on a long trade, buy pullbacks to support, or close out when a price target's hit, close a long position, and often reverse to short to gain that pullback. And therefore, if you follow me for a while, it's not unusual to see let's say a 20% move on a trade that went from its entry point to the final target, but yet we've made double that by sidestepping the pullbacks, by exiting where, one of the earlier targets where a pullback was likely, and or shorting that and then buying back in on a pullback to support. So as I do those, just keep in mind, as I do the updates on the active trade ideas, and the reason I'm telling you this is some of those, the train may have left the station. It may not be objective to enter or add on at that point, especially if we're approaching our final price target. The reason I list final price targets is that's where I believe the RR, the risk reward ratio, is no longer very favorable. And again, if you follow me for a while, I give you my 2 cents. If I do my best to give you my opinion when a target's hit, whether I expect much, if any, of a reaction, or whether I plan, if I'm in that trade, plan personally to sit tight. I don't take each and every trade on the site for multiple reasons. Sometimes it has to do with, maybe fully committed to that particular sector. If we're trading individual stocks within a sector, I might have my fill, so to speak. Or like this one, I'm going to pass this one along to you. I was this far doing my little pinch finger thing from sharing it with you, and I'm going to share it now with you. And I was considering adding it as an active trade I did, and I very well may. However, I want to see, as you guys know, my focus. I've been hyper focused on the Mag 8 stocks recently, and as I've showed you, I've had quite a few with check marks, sell signals I've been waiting for, and there's just a handful more of levels that if and when I get those additional sell signals, it will give me a high degree of confidence to take the current QQQ position to a full short position. So I'm going to get to that. So let me pass this along because I don't want my bias, my expectation that the market is on the verge of the next big correction right now. And so personally, I'm going to pass on this at this time, but I want to share it for you because I know there are some of you that take a different outlook, whether it's near term, longer term to the market. And my job, again, at the end of the day, my job is to share my analysis, share trade ideas, share what I think are objective entry points, exit points, price targets. It's your job to decide which ones to take and which ones to pass on. So the software sector has been beat down, one of the underperformers of the subsector of the tech sector, but really nice looking setup, especially if the market holds up. I really like this one. This is super duper, or really nice, I should call it, not super duper. Long-term support about 113. The stock hit it, bounced once, has pulled back here for a second test of that low. So I can tell you, it provides an objective entry, no doubt, especially in a vacuum. and especially if the market holds up. So I've given you 2 price targets. So an entry right now at around the 113 support. First target would be a bounce of about 22%. Second target would be a bounce of about 41%. And I have a max stop, and that means max stop. If I tell you that max stop, it means calculated on to the final target using a favorable risk reward ratio. So in this case, better than a 3-to-1 RR, be about 11%. But it's also on a no, it's closer to about 12, and it's also on a weekly close. Let me show you the weekly chart. So this is a weekly chart, and you can see this is all the way back to 2019. Every single instance, without exception, since it broke above that level, which was resistance there, they bought pullback. So that is a very solid support level. Now, thing about support, thing about bull markets, bear markets, nothing lasts forever. However, again, this is what I do. This is it objective? 1,000%. It's objective to go long here. If the market melts down, it's a software stock, it's a tech stock, it's probably going to go down with it. And again, most of I'm looking for in the very foreseeable future, meaning within the next few years, very good chance I believe we embark on a new secular bear market that's going to have that most can't even fathom. It's not going to look like the first wave of it will probably look like 2007, 2008, and then that's really the last real bear market we had. Again, my thing, I call it COVID Ursa Interruptus, my made-up name for a bear market that would have been, could have been, and was priced in the charts, but then COVID hit, and that gave the the central banks and all around the world and the the federal government's the ability to just hit the nuclear button on fiscal and monetary stimulus. So again, that you do enough of that, you can reverse the course of just about anything. All right, so that's it, guys. I'll just leave it there. I'll probably make it an official trade tomorrow if the market survives Apple. So what the point of this video is, I will follow up later today with part 2 of the long trade ideas. I only got through the first third of them. As I've said lately, we've had a lot more long trade ideas on the site than we have short trade ideas. And that's not certainly not coincidence with the market being in a bull trend. When the trend indicators start to roll over, it's really a function of what I find. When I sit here and I go through charts every day, if I'm finding more bullish charts, then that's what I'm going to share with you. Again, like this one, I'm not going to hide it, and I'm not going to hide a bearish chart in a bull market. We're going to trade them, and if you look at them all collectively, we have a well over even on the short trade ideas in this super duper bull market we've been in for the last 3 quarters or so. Batting well above 500. And then if you go back to the beginning of the year when we had a lot more shorts, we just, we were batting, damn near 1,000 and, high double-digit gains in very short order on those short trades. All right, so that's it. I'm going to move on. There it is. Take it, leave it. Don't, take it, up to you. You have your price targets. And again, let's talk. What I wanted to do is talk the Mag 8 because, again, I remain hyper-focused. If you're brand new to the site, I'm just going to reiterate, I expect any new high in this trading range right here to be a marginal new high that will fail, just like I did back here. That was my expectation then. That's what we got. Marginal new high in both the S&P 500 and NASDAQ 100 had similar trading ranges. Popped, failed, went to the bottom of the range, and then down through long before Trump ever stepped to the podium. That was right here and announced his tariffs. And then that was it. So and look, that may or may not happen. So, if you know me, I spread my bets. I'm going to, and I have to say this because this is just one of many trade ideas, but it's more so analysis. There's not going to be ever a point in time where I'm not going to, provide the majority of covers on the stock market, because that's kind of the tidal cycle, if you will. That whole, phrase, all ships are lifted in a rising tide. Well, it's not really all ships. As you know, I'm very selective, and I can find short trades on any sector or any index or any market in a roaring bull market. And likewise, when the tide changes, mark my words, you're going to have at least a fair amount of long trade ideas. And I'm just talking within the stock market. Then, as you know me, I'm a massive proponent, with my background being, a financial advisor in my previous life, asset allocation. It's the key to investing. Studies have shown asset allocation, proper asset allocation, is more important than security selection. And again, that's for the masses. I kind of hyper focus in security selection, being doing what I do with reading the charts and trading, swing trading. But it is just every bit as important, in my opinion, in swing and trend trading to broaden your horizon, spread your bets among uncorrelated assets. So that's it. So trading range. Okay, so where we're at, it's kind of a sloppy looking chart, but this is a 60-minute. Let's drop down there. You can see, again, we have a lot of noise in the charts lately. We've had yesterday a Fed meeting. We had 3 of the Mag 8 stocks report. We have the 4th tonight. And I'm going to go over those right now, and then I'll wrap this video up and get it out to you guys. So again, no change in the outlook or the technical posture. We've had multiple sell signals recently on these shorter term breaks on the 60-minute charts. I really like the futures. That's natural gas. Let me get to NQ. This is a chart I've been focusing on the my trading proxy, my preferred trading proxy in the NASDAQ 100 futures. And it's a wash, rinse, repeat scenario, all within a larger trading range. So as I've said, if you're only trading the stock market, if you're only trading SPY, QQQ, or the futures or something along those lines, well, you've gone nowhere. Investors have gone nowhere. Your 401k has gone nowhere. It hasn't gone up, it hasn't gone down. We're in a multi-month trading range. I mean, it's really not much more to add. However, there are, this is the world of a swing trader. This is the world we live in. Divergent highs, divergent lows, wash, rinse, repeat. That was the most recent divergent high. And now we have 3 of the market leading Mag 8, what I call the Mag 8. Those are the ones that I put the highest emphasis on, the top 8 components of the NASDAQ 100. And we're going to go over those, and then I'll get this video wrapped up and out to you. So we're on QQQ. Something's not, here it is. Okay, I need to load my charts. Okay, NVIDIA, the king of everything, king of the AI bubble, undisputed champ, lead sled dog, whatever you want to call it. It's kind of an outlier with earnings. All the other Mag 8s, majority of those will be out of the way within the next week or so. And this one's going to give us, we have about a month to wait. And it's been just, it won't go down, but it won't go up. This has been in a very, very long trading range, as you can see. I'm boxing in here since the beginning, really, of last July, with one false breakout attempt that, just like my expectation on the stock market, failed. Went to divergent high, and then we went back down to the range. We've been bouncing. So my question mark here is the bottom of the range. The magic number, we got first support here in the midpoint of the range, but then the magic number, the lights out level, I call it, is about 165 there. You have the 200-day moving averages coming in, blue and red line. Those do just a phenomenal job of defining the primary trend. In most tech stocks, including NVIDIA, we tested them here, bounced, lost them there, and then rejected on the 200 exponential. And that, from that point, if you miss the breakdown, I mean, we're already short. We were short off that divergent, that bearish engulfing candle. We had multiple entries and trades on the NVIDIA back then, but I'm trying to just measure for you. It's the level here, about 123. Once the 200s were lost, there was a 29% drop into those lows there, April lows. Okay. So again, NVIDIA is going to kind of do its thing unless it gets dragged down or dragged up. That's a possibility by the rest of the Mag 8. All right, it is the leader. Again, the lead sled dog, but it's going to have a muzzle on it for a little bit of a while as people await earnings. I don't think you're going to see many big bets laid until that happens. So Alphabet. This has been best in breed lately, as I've stated, in the Mag 8. The strongest chart, and we had a sell signal that I was waiting for here and a break the trend line, and then we've been back testing. And as you guys know, and you hear me say often, I'll take a breakdown, but then when you start back testing, I'll watch it, and what I want to see and like to see is a nice rejection off there, because the problem with back testing a trend line from below, well, 2 things. Number one, you can ultimately move back above the trend line, and then it was a false breakdown. Or you continue to backtest at higher and higher levels. So if you're short, you're going to feel a little pain every day. It's like a slow bleed, right? So I'd like to see a rejection, a big red candle off there. So let's see how we close the day. Right now it's a rejection, but the day is very, very young. And you know me, especially around earnings season, take any early session move with a big grain of salt because you can easily get a stick save. Not the stick save in hockey. In trading, a stick save is when the candle, you have an intraday break only to see that candle park right back on or above. But look how well, guys, I haven't tweaked this trend line. I gave it to you well back here, well long before it broke. There was our breakdown candle. That's a green close right there. The solid green means we closed on it. The hollow green means we closed down on the bottom of it. We closed on it here. You can't make this stuff up. Again, this is a trend line that hasn't been tweaked or modified since, you can see I made it back on October 24th. Last tweaked it on the 22nd. Last time I touched it or did anything to it. And so say what you want about it, but I think it would be hard to argue that that's not a technically significant level. So looking for that big red rejection, and then this little question mark right here turns into a check mark. And remember, this is a simple, again, at the risk of oversimplifying it here, I have I've been doing this for the last several weeks, if not months, giving you potential and active check marks, telling you that when the majority of the Mag 8 break down, and the more you have, if you have, say, so 5 is the majority, you have 6, 7 on a sell signal, it gives me the highest degree of confidence that the market has now broken down because the leaders are dead. You take out the generals, the troops are going to scatter, right? If you blow the general's head off, that's what we're trying to look at or see happen here. Apple, just one of a great example of threading the needle in a bull market that was going to all-time highs, and the former crowd favorite before Nvidia displaced it, but still a very significant third largest component in the Nasdaq 100 and the S&P 500. We shorted it there. I gave you a stop based on a weekly close above that line, which we never violated. That was intra-week, closed back down below it. So by the skin of our teeth, it kept us short. We hit my first, second, and third and final target, at which point I expressed my strong preference. It was a final trade, so we closed out and said, look, they're probably going to buy Apple on the 200, and you could have turned around and gained that bounce off the 200 and added from the, it wasn't a monster trade because, again, it was a counter trend trade. So I only gave you 3 targets for a 10% drop. We made that, turned around, and off that level, off the 200s, we had a bounce, oversold bounce. And again, I told you this many times, man and machine alike buy the 200s, meaning algos, algorithmic trading programs, and automated trading programs, and people see the 200s and they buy it. So now we already have the check marks. Remember, this was a minor trendline break. This was a much more significant, larger trendline break. And so, I don't have those big check marks. I had hand drawn them in, but Apple was one I already gave you a check mark on. And so this is just a reflexive bounce. However, I'm going to say it's a bigger check mark if and when the 200s are gone. And, that can be evidenced by just turning off all these lines, going to this chart. The blue and red lines they're the 40-week exponential moving averages, simple and exponential, the blue and red, uptight. And so this is when you're below it, and below it, below it. So all your corrections, and this is just within an ongoing bull market. So right now, if you want to make the case for just a correction, but these corrections in this bull market, remember, are very profitable up to short, 35, 32, 39, 35, 34, 45. Those are all off the divergent highs, right? And we are coming off a divergent high. All right, let's move on a little faster here. All right, so there's Apple. Back to that bear flag I gave you back here. Remember that bear flag played out nice. This was the flagpole, your measured target that I gave you as we were forming the bear flag. Told you your sell signal and last objective short entry would come on a break of the bear flag, and the measured target was the highest point of the bear flag down to the bottom. So that's how you take it. You take the flagpole, go to the bottom of the flag, add that same pole. You can just duplicate the trend line and that it meshed perfectly with my final target, and then boom, we bounced. So that's it. So we got out, sidestepped, or you could have profited from that give back. And now let's talk about Microsoft. Microsoft, really nice. So not even, what was it, a week ago? Week ago tomorrow, on last Friday, I told you this was the most bullish looking of the lot, meaning of the Mag 8, and would most likely, if we broke this trend line, trigger a rally. I gave you 1, 2, 3 price targets. When the 200 was hit yesterday, what's it, Tuesday or yes? Yeah, right here. I told you that was my preferred target, my preference to take profit. In the chart I gave you, I misspoke. I said Thursday they'd report. It was yesterday. Either way, same difference. I told you there wasn't. I was very clear on that. That I'm not holding out, nor do I think it's worth it for anybody to hold out for that extra 2% from that initial target I gave you. So when we had a quick run to my preferred target, which were the 200s, you can see we split the crosshairs. The red's a exponential, the blue is a simple. I keep them both on my chart because some traders use one, some use the other. It's probably about a 50-50 split, therefore I use them both. And collectively, sometimes you reverse off the simple, sometimes off the exponential. In this case, we split the crosshairs. And so for those of you that made the quick, what did we make? It wasn't huge because it was a 3-day trade. We exited right here. Or was it yesterday? Either way, same price level. So we made a quick 7%, and then you sidestep this drop now, 12% on earnings. So, and that keeps those check marks very much intact. Remember, the check marks came on the double top high, divergent high, breakdown, back test, followed by that big rejection there, check mark there. 200s were tested for over a month, about a month and a half, and then rejected. That was your next check mark. So we've had nothing but check marks in this one, and now a second rejection, a very impulsive earnings induced rejection off the 200. So this one has, again, fourth largest component, one big fat check mark for my longer term bearish case right now. Amazon, this one's going to report February 5th. So we're going to have to wait and see what happens there. There's your primary trend line. Check mark 1 comes on a break of that trend line. That's they're little question marks. We need to break them. They haven't given me that. This stock hasn't given me check marks other than, remember, this was a big divergent high. Our primary, this purple trend line was the primary. We go all the way back to the beginning of 2023 lows. At that point, if you go back to the archives in the beginning of 2023, Amazon and Apple were listed as my two top picks with an overweight in the fangs. For this reason, we had a beautiful bullish falling wedge, divergent low. Nobody wanted to touch tech stocks, and that's when this was one of my top picks along with Apple, and again, or a general overweighting in the mag. To be bullish any of these guys, especially more than one. It's to be bullish the market. It's to be bullish the NASDAQ 100. You can keep it simple there, one ETF instead of, then you're diversified and you get them all. Either way, but we've come full circle. That's that same trend line off that low from the beginning of 2023 when there was the major bottom in the NASDAQ 100. We took it out here, back tested for a while. Rejection 1, another back test, bigger rejection. So again, check marks are the 200-day moving averages, but this is my lights out level, 211. So we've got work to do. And again, they're not going to report for a while, so we can't, it's still not that all in moment because some of these guys have given me my check marks, but others are not. In fact, this is within spitting distance. The bigger risk of Amazon right now, if you will, is to break out to new highs, right? Because of the proximity to new highs. So we're going to watch that one, and we may be in a hold pattern for another couple weeks till the rest of them report. Next up is Meta report. Meta had given me a bunch of check marks. It was, until this point, it was best in breed before Alphabet kind of took the reins. We put in we were diverging. I always say divergence isn't a sell signal. Sell signals, we had a divergent high there. Then we got a sell signal on the beautiful trendline break. Big double-digit drop of Meta, followed by a divergent low, gave us this catalyst to make a marginal and still divergent high. The divergence is only extended. Double top high there, 2 equal highs. with the divergence very much intact, with your indicators making lower highs. And then came a break of this trend line. So that little green, that was a check mark. I don't know why it's showing as a question mark. I meant to put a green check mark there. I've covered this one with you. Boom, breakdown. That also was a check mark. They're all supposed to be check marks. Yeah, check mark on the break of the 200s. We back tested the 200s for weeks, got rejected. So something wonky is going on here. This is certainly puts the brakes a little bit, or calls into question, because this was one of the ones I had a check mark on. I do want to, that's why I'm doing this video. It's a big pop today. Let's see if it holds. Let's see if it holds throughout the week. As you've heard me say often, when a stock reports earnings, there's three components to that, really. The initial release, where both man and machine, the algos parse through the data, looking for keywords. The earnings report is released. Then comes a conference call. Sometimes that can change your trajectory based on guidance, forecast, other little nuances that might not have been caught on the initial release. And then comes the trading. This thing just reported last night. So we're very, very, very early into the first regular session. That's when the institutions have room to maneuver with the extra liquidity that you have in the regular session. Plus, it gives, may take a day or so for everyone to kind of digest the information there. So, but right now I can tell you that is bullish, very bullish, because it's recovered the 200-day moving averages. But tomorrow, next week, 3 weeks from now, if we lose the 200s again, I'll point it out for what it is a whipsaw. And again, taken collectively, I will tell you I suspect that it will prove to be a whipsaw. There was a big intraday pop there, and that was probably earnings induced, right? Let me see. Where are my earnings things not popping up here? I don't know. Sometimes you can see some of them. There's a little E right here. Either way, let's see what this one does. It's still off the highs. The day is young. The week is young. And again, remember, my analysis on these guys in regards to the market is not on any single one. It's taken collectively. You're always going to have some of the Mag 8s that are doing better than others. And so when the majority of those have given me the sell signals I'm looking for, it just increases the odds we're going to go down even more. And likewise, guys, for those of you bullish, the majority of these sell signals that we've had recently, they get negated. If they stay negated, we go up. I'll give you my 2 cents, and you know what I'm going to say right now. If you follow me for a while, any new high will still be a marginal new divergent high. So it's one that I would put good money will fail. Doesn't necessarily mean I short it just because it went up, and just because you have divergence. I will look for the next sell signal at that time, if that time comes. Sell signal being, again, can come in many forms. But all right, so I spent enough time on that. I just wanted to point that out, that Meta is big pop up, and it's regained its 200-day moving averages. Just to kind of show you a history of that. You turn off all the lines, you see they are just beautiful trend indicators. Bullish when you're above it. There's the 200s. Lost it right here. Back tested, rejected right there on the 200 exponential, the lower of the two, and stayed in a bear market with a drop. Since it lost them there, the total drop was about 73%, right? Went up. What did it do here? It tested them for a couple days, and then this is the most bullish kind of thing there is. Pop, big gap above to recover them, right? That also came after a bear market, big divergent low. Again, we had 101 reasons, and we were long the Mag 8s right off the early 2023 lows. Again, that was full in, long, bullish time based on technicals and everything else. But then again, from this single stock, that was very bullish, and it never looked back. Tested them there, and it lost them there. And you're going to say, oh, you can call it a whipsaw if you want, or call it for what it is. It dropped almost 20% on that drop. So there was plenty of opportunity to short or get out if you were long. And most longs would have probably stopped out anyways on an 18% drop. So again, not a whipsaw. We stayed under there for a couple months as well, or a month and a half. All right, fast forward, lost them here, tested there, rejected, and let's see if this is just an outlier. Sometimes you do get that. It's not unusual at all to see stocks briefly recover their 200s only to fall back. And guys, by the way, if again the majority of the Mag 8 give me those additional sell signals, you know me, I try to stay away from the G word, guaranteed. It goes back to my days as a financial advisor. There's very few things that I would ever give a guarantee on. Even government bonds that sell treasury bonds. Look, are they guaranteed? Yeah, well, they're guaranteed by the full faith and credit of the U.S. government, but there's no, it's nothing to say they can't strategically default on. That's what they're, that's the plan right now. That's if you have any wonder why Trump's embracing a weak dollar investment there. It's the only way out of our, spiraling debt. You just issue new bonds, new dollars to pay off the existing ones, and you're just diminishing the value of a dollar, and that's how you default, but without actually defaulting, right? You're just giving people back, paying back your bonds with new money that you print, new issues. And all right, so that's it. There's Meta. Let's go to the next one. We're almost done here. Turn back on those lines, so we'll watch that. Especially on a weekly basis too, guys. That's another way to kind of smooth out the whipsaws. I should have said it before I left Meta. You can go to a weekly chart, do the same thing, and see now. You can see here in a weekly, held, lost the 200s, dropped. There was that weekly spike above, only to close back below. So when you look at it this way, if by tomorrow, end to close tomorrow, Friday, and Apple has the potential to bring Meta down with it, we close there, that's going to be very, very bearish. Why? The only thing, in my opinion, more bearish than a failure to get above the 200s, like this, and this, the only thing that's more bearish is a recovery followed by a failure. Why is that? Two reasons. Number one, it sucks in new longs that buy it, and then their stops. If that's their reasoning, because they see a solid recovery back at 200s, this is when they're proven wrong. So they stop out. What do you do when you stop out of a long position? You sell. And the other thing is, it blows shorts out. I've been talking about this short interest. Nobody wants to short this market anymore, except me. Again, it's selectively and very cautiously, and not a full position on the indexes yet. But what it does, it blows out those weak-handed shorts or any reasonable short in the stock. I mean, come on, if you had a plan because you shorted Meta because it lost the 200s, stick with your plan. So you should have been stopped out, right? I don't have a position in Meta, so it's not a concern to me, but that's what makes it bearish. And when those short sellers buy, once they're blown out, it clears a way for a bigger drop, because short sellers, as I've often said, are the only guaranteed buyers in the stock market. Let me repeat that saying. This is my view, but I know it's to be true. I know it's true. Short sellers are the only guaranteed buyers, because when you short a stock, you must buy to cover. You have to close out that position. You're borrowing shares. When you shorted it, you sold somebody else's shares. You borrowed them from your broker. They took them out of someone else's account, gave them to you, and you must buy those to close out that position. Whereas a bull who's bullish in rhetoric, I mean, they could be foaming at the mouth, Kramer type bullish, right? And they're going to say, I'm going to keep buying. This market's going to the moon. But they don't have to buy. Something can change their mind. So they're not a guaranteed buyer. They're a potential buyer. They might have cash, but for whatever reason, they may change their mind. Short sellers can't. They must sell. So when they're blown out, and when you have a lot of short interest, it puts a kind of a floor on stocks, because as stocks go down, they start to cover and take profits. But when they've blown out, that's where the biggest drops come from, when shorts have been blown out or given up. And that's what I've seen lately. Short sellers, most of them have left the building. All right, guys, we're almost done here. Broadcom's dancing the line. The line to me is this purple primary uptrend line. Also, Broadcom bottomed right before those key 2023 lows, when the NASDAQ 100, the majority of the Mag 8 bottomed right there, the beginning of 2023. And that trend line is still valid. We had one violation. Came off that divergent high. We traded below there, and it's a beautiful level, guys. When I say beautiful, I'm sorry. I look at charts like artwork. Someone might go in a museum and oogle over the Van Gogh. To me, charts, there's beauty in certain charts. And this one, you have the primary uptrend line with one single violation, but enough reactions to make it very valid. And guess what comes in under it? Yep, those beautiful 200-day moving averages. So you can see they bottom there, they bottom there, they bottom there, they bottom there, lost them there. And when they lost them, this stock didn't blink. It dropped another 24%. And then what happened after that? Well, the 200 support, once broken, becomes resistance. Resistance, big rejection. Finally, recovery, successful back test, off to the races. So this is my big level, big check mark to come on the 7th largest component. So number 7 of the Mag 8. And then finally, Tesla. Tesla, as you know, I've given you the check mark recently on a breakdown below this uptrend line right here. Trend line comes off the April lows. And my check mark was waiting for rejection, which we now have. Earnings are out of the way. And you can see breakdown candle. That was my first check mark. Back test 2, rejection. And now earnings are out of the way and it's moving away from the trend line. All the better when 412.50 gets taken out, and then even better when the 200s get taken out. And then this purple line is probably lights out for Tesla right here, about 361. So, all right, that's it in a nutshell. Did I cover 1, 2, 3, 4, 5, 6, 7, 8? Yeah, all 8. Okay. And that's it. For the reasons I've stated many times over, there's no reason to go over the other 92 stocks in the NASDAQ 100 because as of, when was the last time I updated this? I update this from time to time, but you can see collectively the top 8, they make up, the vast majority of the NASDAQ 100. So the remaining 92 stocks, they really don't even matter unless they all happen to move the needle at once. Which is in a very big way. Again, it's not their fault. They just don't have the market cap to contribute to the weighting of that index to make it move as much as, much smaller moves than these guys. And again, this is a little stale dated. I need to update these weightings, which I'll do next time I get a chance. I'm gonna wrap it up here, get the video out to you. Apple tonight, and that'll be it. That's half of them. And so let's see what Apple does to the market, and I'll let you know if anything changes. All right, and I'll get that second part of the long trade idea video out to you as soon as I can today. This has been Randy Finney with Right Side of the Chart. Have a